everyone, for the viewers of Pro Stock. Thank you again for tuning in. Today we have a great guest joining us that will be talking about some positive things about what's happening even during pandemic. So without further ado, let me just introduce the chief strategist for COL Financial, Miss April Tan. Hi, April.
Hello. Thank you for inviting me.
All right. So, April, it's great, and we really wanted to talk about something positive. I know the lockdown has impacted people in so many different ways, right? But I think a lot of people are curious to understand, what is your view of the overall economy, and is this a good time to be investing?
Well, okay. I know it's easy to be pessimistic, especially, you look at the GDP growth. Yes, it was up. It's like a glass half full. It's up by a lot on a year-on-year, more than 11%. And, I've been talking with a stock investor and a fund manager, and they said, well, yeah, it's up by 11% year-on-year, 11.8 in fact. But I think a lot of the investors also focus on the fact that if you compare second quarter to first quarter, it's down. So, it's a glass half full. On the one hand, we're so much better than we were last year, diba? On the other hand, we can't seem to, the momentum is not as strong on the recovery. We're lagging behind other ASEAN countries, and that's not good. Therefore, the market, instead of recovering this year, it's been kind of weak, and it goes up, then it goes down because we do ECQ, etc. So in some ways, it's mixed. So if you also look at the different sectors in the economy, the performance is mixed. There are some segments that are doing well and some segments that are not. So it's quite mixed. So it's hard to be entirely positive. But, that said, as far as stocks, the reason why we're still positive is that we think, you have the vaccines that are out there, and the countries that have vaccinated a lot of their population have actually managed to reopen much faster and more permanently and are enjoying strong rebounds. So that said, I think it's just a matter of time that we will also enjoy the same recovery. We just have to be confident and hopeful that it will happen. It can be delayed, but it will happen inevitably.
All right. Not the most optimistic, but it's hopeful. And I think that's all we can do right now is be hopeful about the state of things. So for those who are tuning into Billy, just a quick background, and if you want to know more about these things, April Tan is actually host a show weekly at ANC, and she also writes for Daily Inquirer. So if you want to know more or just get more insights on stocks and the state of the economy, just look her up. She's active on Twitter. But if not, go to their website, COL Financial. So let's get to some details, April. Just for those that perhaps are not familiar, what is a real estate investment trust, and how does that really work?
Okay, so I think in 2020, one of the newest products of the PSE is the real estate investment trust. So the real estate investment trust is actually a company that owns income-producing assets. And when we think of income-producing assets, the most common income-producing asset really would be your rental properties, right? So far we have, right now we have, I think, 3 listed in the PSE. You have a REIT, and then you have DD Meridian Park, DD MPR, and Philinvest, Phil REITs. So three of them, but we will have more soon. Okay, so essentially, usually as Filipinos, we love to buy properties as investments because we think, oh, we're gonna buy this and then we're gonna rent it out and earn income out of it. So when you buy, say, a REIT, real estate investment trust. Essentially, the company already does the work for you. They have this portfolio of rental properties or any asset that produces a regular stream of income. And you know, the income that they generate, they have to pay out 90% at least to the shareholders as cash dividends, no? So in that respect, you're also like an investor in a property. And of course, why do they have to do that? Well, first of all, you know, under the REIT law, there is this benefit that they enjoy. The REIT sponsors, we call them, for example, a REIT is sponsored by Ayala Land. DD Meridian Park is sponsored by Double Dragon, and Philinvest REIT is sponsored by Philinvest. So Philinvest, Ayala Land, and Double Dragon have this benefit of not having to pay income taxes under the REIT law. And the only way you can do that is if you do pay 90% of the income, at least 90% as cash dividends to shareholders. And the beauty of it is, you know, if you're the owner of the REIT, you get a yield that is higher than what you would earn in the bank. Right now, these REITs give you somewhere between 4.5% to 6.5% in terms of yields, which is very high if you think about it. And aside from that, you know, if you're an owner of, say, a rental property, you have to think about finding your tenant, diba? And managing your property. So it's such a hassle. But if you own the REIT, then, you know, you just buy the REIT in the Philippine Stock Exchange, put in your portfolio, and every 3 to 4 months, every quarter actually, you will get cash dividends from these REITs. And of course, it's more diversified. I mean, if you're say a property investor, since properties are so expensive, you can only buy so many properties. You can't buy a lot, diba? So you're not as diversified, and you're limited the types of properties that you can buy.
Yeah. Correct. And I think it helps you really reach out to more, because you see, I think some of those that have done this on their own, April, if they get stuck, right, if they don't have renters, especially now.
Yeah, the vacancy is so high. Oh.
Exactly, the vacancies are high, then you're saddled with that, and then you need to maintain it and all that. So I think for those that are watching us, this is an alternate investment for you. You don't need to like buy rows of apartments just because. Yeah. So for those who are interested, please look up COL Financial and learn more about this. So having said that, thank you for that, April. In terms of the stocks in this field, which developer would you recommend to our audience?
Which REIT? The REIT is different, from the property developer. So yeah, I think if you're talking about the REIT, actually for me the most interesting one is the latest one that listed, Philinvest REIT, FILRT. Okay, so that one's the most interesting because it provides the highest yield. Even though the price has increased from the IPO price of 7 pesos to around 7.3 to 7.4 right now, you still get a yield of around 6%. And when you look at the asset base, it's pretty good. They own offices in the Alabang area, and those are all PESA accredited. The tenants are PPOs, so pretty stable. And then of course there are rental escalation, so you can expect the dividend income to go up. Okay, so the likelihood of it becoming vacant, or at least suffering from huge vacancy rates, is very minimal.
Right. So if the REIT for Philinvest or FILRT is good, does it follow that as a developer, their stocks are also okay?
You know, actually, the thing is, okay, if you look at the Philippine Stock Exchange, the funny thing is the stocks, the developers or the REIT sponsors are mostly trading at a huge discount. Okay, so let's just put things into context. Like, what do you mean huge discount? Okay, so if you look at listed property companies, I think only SM Prime, SMPH, and Ayala Land, ALI, are trading above their book values. So what do you mean? What is a book value? The book value is the price at which these companies bought their properties at. Parang ganun siya. Yung stockholders' equity, that's the book value. Plus their profits, you accumulate. So the developers are actually right now trading at a discount to the book value, when in fact we know that the property prices have all gone up so much. Okay, so they're that cheap. And in fact, the funny thing is sometimes if you look at the total value of the REIT, which these property developers own, they're almost the same as the value of the developer which owns them. But of course, the developer also owns other assets, such as land bank, such as residential, such as malls, that are not part of the REIT. But then sometimes the REIT is valued the same as the parent, or the developer stock. So if you ask me, yes, these developers are cheap. Now, why is it so? Well, first of all, I think concerns about the economy, and also if they're heavy on malls, concerns that the mall business is not doing well. If they have hotels are not doing well. Residential, recovering, but not as good as 2019 maybe. So it's really poor sentiment. So and the fact that they don't pay as much cash dividends makes them less attractive. So maybe that's why they're trading at very depressed valuations. But if you ask me, are they good long-term investments? I would think so. I think the answer is a yes. But you have to be able to wait, be patient, because it might take a long time, and they don't pay as much cash dividends. So you have to be more patient.
Right. So April, does it mean that REIT will be for those short-term investors, and then the developer stock investment would be for long-term investors?
I don't think it's more of long or short. It's more of your risk appetite. No? If you're a risk-averse investor, then you go for the REITs, because every quarter they give you a cash dividend and you get an income. But everything's upfront, everything's there. It's similar to a bond, but it's like a higher risk type of bond, because again, in the bonds, they have a coupon, na you can depend on it. Like it's more or less 100% guaranteed that they can pay you, unless of course something bad happens to the company. For the REIT, as long as the rents are going up and the occupancy rate is high, they can give you those cash dividends. So it's a little bit, it's a riskier version of a bond. So so if you're very nervous, this is your first time to invest in stocks, then maybe a REIT is a good alternative for you.
Right. Okay. Yeah, because it's more accessible as well, right? Bonds are typically more costly, and again, might be long term as well. All right. So just on the companies that you've mentioned, I know you've mentioned the SMC, right? So there's, again, they're diverse.
SM Prime, not really SMC.
No, SM Prime. Okay, so are they in a good position right now to, shall we say, from a both REIT and development perspective, even though the malls are not doing well?
I think they're okay, in the sense that, okay, well, maybe these property developers I'd like to compare today to, say, the Asian financial crisis. So compared to before, our property companies are less leveraged. And secondly, interest rates today are much lower than they were. So in that respect, they have more cash. So looks like they can survive this crisis. They're much stronger. And they have more, say, sources of income. Yeah. So the difference of the crisis today is that, in the past, usually when there's a crisis, the interest rates shoot up and you have no access to credit whatsoever. This time around, you do have access to credit. The banks continue to lend to these property developers, and they're very strong, and they have that rental income. And I think another benefit is, for example, the big ones, a lot of them are doing REITs. I mean, if they haven't listed yet. So right now you have, again, a REIT, DDMPR, and PhilREIT. So the companies that actually sponsor these REITs, such as Ayala Land, Double Dragon, and PhilInvest, actually get money by injecting their assets into a REIT and listing them in the stock exchange. So that's another source of capital that in the past was not available. And we have Robinson's Land and Mega World also doing a REIT within the year. So they are much stronger today than they were, say, in the past. So I'm not really worried about them. It's more like their income is going to take a while to return to 2019 levels.
Right. And I hope everyone is hopeful, right? That as we increase the vaccination coverage in the Philippines, regardless of variants, that hopefully there will be some level of normalcy. I don't think anyone is projecting a full return to normalcy, but I think we're tracking towards that. Okay, another question here is regarding the public construction companies that we now have. They get government contracts, but do you foresee that all these things that are happening will impact public construction companies?
Okay, so at least for those that we cover, okay, I think maybe EEI would be more of a pure play as a construction company. Megawide, on the other hand, well, it's good that there are more projects right now, but it's also affected by its airport operations because the airport, it operates the Mactan Airport, and that one is a big drag on it, so it's also being hurt by that. So the public sector is spending more on infrastructure and construction. The problem is the private sector is not as it's not as strong as it used to be. It's recovering, but then again, still way off from 2019 levels.
All right. And again, I think everyone is very tentative right now. I think the REIT may be a great alternative for those that are really looking for investment opportunities. Another question here is the rise of e-commerce. This was phenomenal, that are thriving, right? I think it's that sector. Because all of a sudden, everything has to be done online. How do you think this will impact the property market?
On the one hand, maybe the malls, it's not good because you'll have eventually less traffic, less foot traffic going to the malls. I mean, if you've taught people to buy online for more than a year, well, maybe some of that will not go back to the traditional way of shopping because you kind of force them and they kind of learned and they now enjoy doing that. So maybe some of that spending has moved permanently away from the brick and mortar to online, and well, that's not good, right? But that said, maybe the warehousing industry is doing better. So well, anecdotally, I mean, this is just a personal observation for us. I mean, even before the pandemic, we were noticing that the demand for warehousing or the warehousing rent is going up simply because, the economy was improving. And when the economy improves, therefore, you do have more demand for consumer products and warehousing. But, the property that is devoted to warehousing isn't exactly expanding. They have been increasingly converted to, say, township developments, diba? I mean, there are a lot of, say, FTI, for example, used to be like manufacturing, warehousing, but they've been converted to housing, offices. So you have that increase in demand, but the supply is shrinking. Maybe that's why the prices are going up. So, and then plus now you also have that e-commerce angle, which is why maybe rents on the warehousing are not going down, because the demand has remained steady. Maybe for traditional, it has weakened, but there's this offset of the e-commerce. So it's more anecdotal, really, because this is a sector, the industrial segment has been a long ignored sector, people have been focused on offices, right? Residential. So you don't really get a lot of people talking about industrial segment. But, anecdotally, that is how we feel about it.
Right. So again, April, we appreciate that. That's precisely why we're interviewing is because we want to get the insight of an individual that has actually not just worked in that sector, right? But you have enough experience. Because I think you're right. From an industrial perspective, there's no going back, to your point, right? People have been doing it for a year. It's very convenient, right?
Yeah.
Unless there is a compelling reason for them to go back to the brick and mortar, people will choose what's more convenient, right? And you're right. So just to pick your brain a little bit, and again, it can be anecdotal. What would you say could be a pivotal action from companies that are right now in this, like a mall, right? How do you see the mall evolving so that it survives?
Well, I'm sure they will survive. I think prior to this trend of e-commerce, they were already thinking of ways to be relevant. And, for example, you had SM, or even any other mall, you will notice in the past they would be full of stores, retail outlets, but more and more you will see that they're all about experience, right? You go there to do your chores, so services, right? They have all those. You can do your hair, your whatever, you can have your pets serviced, right? And your laundry, etc. So they have more of that, and then they have more restaurants. So these malls became more lifestyle oriented, and that is their strategy on how to survive. Except right now, of course, because of COVID, they are, people tend to, not to patronize these stores for now. But, of course, eventually, I think, the traffic will return, but probably not to pre-pandemic levels, right? It will, but, I think it will return eventually. It just might take a while.
All right. Okay. So I think that's a good insight, because I think a lot of people now are struggling to adapt, right? Every time there is a lockdown, people would ask, what's going to happen next, right? So I think, and that's why we're doing this for building. This Pro Stock is our social corporate responsibility of providing people insights from professionals. And I think that's the main question, April, in terms of, let's say, you used to thrive in a mall environment where you sell your products. Now you're forced to go online, right? So I think there's still a lot of innovation that can happen in the industrial real property sector to adapt to the constant changes. So thank you for that. Another question that we have for you, because we already spoke about the industrial sector. What are your thoughts on the Home Depots, the Wilcons, because those are products that you can probably order online, but it's not like you can have a Grab pick it up because What are your thoughts on this?
Yeah, these companies are actually doing very well, notwithstanding the pandemic. So both All Home and Wilcon have reported quite strong earnings, and so they're doing well despite the pandemic. And this is a trend that we're seeing also in other countries. I think as people spend time at home, they think of home improvement, to make their homes more comfortable, and adapting to the new normal. Maybe you wanna renovate it a little bit, or if you have like a lot of people actually are into the food business now, like the small food businesses at home, right? The mompreneurs, so they do a little bit of renovation in the kitchen, right? So these companies are actually benefiting a lot. Their earnings have been resilient to the pandemic. But between the two of them, Wilcon is really good. Okay, the earnings have been very strong. The problem is it's expensive. They're trading at around 30 times PE. So just to put things into context, the market right now, on the average, the stocks are trading at 18 times PE. Property companies, the developers, SM Prime and Ayala Land are trading below 10 times PE, but Wilcon is 30 times. So you see, the higher is the more expensive. All Home is a cheaper alternative. It's a smaller company though, but we think it's also a good company, and it benefited from the pandemic. Profits are also very strong.
Right. So I guess people who are listening, those are great insights. And, again, like anything, before you make the investment, please do research. And if you need advice, please contact COL Financial to give you a professional opinion on whatever you're exploring to invest in. All right. So as we wrap this up, April, I guess, and this one, again, not to hold anyone to anything, but we're going to go through a list of companies. And the question that people would like to understand is to get your insight as to whether they buy, hold, or sell. All right, let's go through that. So in your mind, April, Ayala Land, buy, hold, or sell?
Yeah, we do have a buy rating on Ayala Land right now. So yeah, we think it's a good opportunity to buy the stock.
All right, fantastic. DMCI.
DMC, we also like it, but yeah, I know DMC is also into property development, but the reason why we like it is because, well, it's benefiting a lot from its subsidiary Semirara, who's into coal mining. Remember, one of the things happening right now is commodity prices are going up, right? So it's benefiting from rising coal prices, and Semirara is also into power development or power generation. And the power situation is getting tighter, and because of that, the prices in the wholesale spot market is going up, and it's benefiting there. And they also give good cash dividends and cheap valuation. So we like DMC for those reasons. Yeah.
All right. Mega World, buy, hold, or sell?
Yeah, we also have a buy rating actually on Mega World. Earlier on we talked about companies doing REITs or listing their properties, spinning them off into a REIT and selling shares. So Mega World will be having one, and it has a lot of office properties actually, making it very attractive from that angle. And valuations are very cheap. So again, it's one of those companies that are trading below their book value and trading below 10 times PE. So very attractive from that perspective.
Yeah, so from an investment perspective, because I think one of the main businesses of Mega World would be to, again, to your point, offices, right?
Yeah.
But how are they impacted by the work from home?
Oh, well, they are affected, but not so much because they have a lot of PESA accredited offices that are catering to BPOs. I think they're more affected by the POGO exit because they also have some exposure because of the huge portfolio anyway. So they're also affected by that. The impact of work from home is more significant for offices that are catering more to traditional offices rather than to the BPOs. Because for BPOs, a lot of them are, have issues about data privacy. Therefore, the workers have to be working from the office, or a lot of the BPOs at least,
Right. And I think that's also one of the key discussion points for BPO stocks, in terms of how they deal with the hybrid, or if they're even going to your point. Okay, so let's move on to the next company here, SM Prime.
SM Prime, well, our issue with SM Prime is the valuation and also the big exposure to the malls, which is taking time to recover. So we feel that these SM Prime is one of those stocks that continue to trade at, say, 30 times PE, which we feel is in some ways difficult to justify given the difficult situation surrounding malls, and it's also a predominantly mall operator.
Right.
So maybe if the stock price goes down, then we like it, but right now we just find it a little bit expensive.
Okay. All right. And of course, you've mentioned this, Philinvest.
Philinvest is okay. It's also similar to Mega World. It's a very cheap stock. Like all of them have the same theme. They're affected by the pandemic, but the current valuation I don't think is justified because they're trading below book value and below 10 times PE. So really very cheap stocks.
All right. And I think we will look at some of the PH infrastructure spending. So we will talk about, because again, we're looking at construction, right? How about mega-wide construction? Buy, hold, or sell?
Okay, we actually don't cover it yet right now, but we do monitor what's going on. So on the positive side, at least the construction business is doing well and it's getting more backlog or orders. The problem again is, of course, it's a airport business. It's still suffering from very low traffic levels because the government is quite conservative because of the COVID situation. So we still don't know when that business will recover.
Right.
We can talk about EEI na lang siguro.
Sure. EEI then.
Yeah, EEI is it's doing quite well because it's a contractor, and I think aside from that, they also have an exposure to Saudi construction in Saudi, and that one is much stronger, especially with rising oil prices. And I think in Saudi they've done more vaccination, so the economy is more open there.
Okay. All right. How about ICT?
Yeah, ICTSI is actually doing very well. The earnings are back to pre-pandemic levels. Our issue with ICT though is just valuations. We just find it very expensive. We think the positive outlook is already priced in.
All right. So you're saying that all the momentum and everything is already priced in, so it can't go higher.
Well, it might. The problem is if they do a misstep, then you put yourself at risk because it's not cheap anyway. So people are already expecting good things out of it.
Right. So the slightest misstep will cause disappointment. Yeah. So I think just to wind this down, the intent and the outcome expected by people is to really get insights, right? For the serious investors, they know who to contact, and if again you don't have anybody, to the viewers, do contact April here and get more insight before you let go. So before we close, April, just last parting words or insights on what would you advise those that are looking to diversify their portfolio? What are you looking at?
Well, I guess if you haven't yet bought stocks, and even though the market looks scary, it's actually a good time to start investing. I mean, you don't have to buy everything all at once. You can do a little bit at a time, or if you're more a bank deposit type of person, a bonds person, the good news is we now have these REITs that are now available that gives you income and also a little bit of capital appreciation. So it's a good way to start investing in stocks if you're a bit hesitant. Yeah, so yeah, I'd like to encourage everybody to buy some stocks. Now is a good time to invest, although it might take a while, but there are so many stocks that are trading at very cheap valuations right now, and if you have extra money that you won't need for the long term, it might be a good idea to invest some of it in the market today.
All right. Thank you so much, April, for guesting on Pro Stock. More power to you and your company. And again, thank you for your time today.
Yeah, thank you for inviting me.
Thank you.